Notice where we've kind of just stalled here. And again, that corresponds with this area, which if you take a trend line kind of right under the consolidation lows here, and we just drag that across, you're kind of just on top of that level. So right now, this 26,800 level, that's your current support up to 27,000, 26,800 to 27,000. But I do think that breaks. What you're starting to do here is form a bearish flag consolidation pattern. So bearish flag is sideways chop, which again is kind of eating up the bulls that are buying, but they're not getting a pop out of their buying because sellers are still making that selling price.
The cryptocurrency market has been experiencing significant losses recently, with Bitcoin dropping to its lowest price since March 29th at around $27,300. Despite many investors and analysts believing that the $30,000 resistance break signaled the start of a new bull market, technical analyst Gareth Soloway remained cautious and insisted that Bitcoin needs to spend a few days above the $30,500 level to fully confirm a new bull market. Soloway gave his outlook for Bitcoin and the overall cryptocurrency market in a recent interview with Crypto Banter, citing uncertainties from continuous regulatory onslaught and the chaotic condition of the U.S. economy. He also highlighted the potential impact of an impending recession, which could lead to further price declines for Bitcoin and other risk assets. These concerns were further amplified by the Federal Reserve's prediction of a mild recession, with Soloway believing that the situation may be much worse than their estimate.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
So essentially what we're looking at is a break of this 26,800, sends us down to 25,000. And 25 will be a monster support. So again, that would be where you would start to potentially flip into a long position on Bitcoin. Now, again, us not breaking above 30,500 and confirming, to me, still tells me that we're still in a bear market. So you just want to be overall careful. But I do expect major support around 25,000.
What would convince you that we actually are in a bull market?
Well, at least for Bitcoin, it's that 30,500 level, right? So if you can get above that and confirm, that was the psychological level here that kind of denoted the 2021 lows, right? Where we had that big dip right down to 30,000-ish, give or take. So again, that would have been a key break point we can see right here. So on a technical basis, that's kind of what I'm looking at. And that's one of the reasons why I expected the market to push us back down on Bitcoin. Now, looking at like the CAC and various other indices, I think number one, you have the US markets that are more likely to be in a bear market that will continue to see selling. You have some issues there in Europe. They're still coming out of some things. But overall, the bottom line is let's keep in mind that the Federal Reserve has said that we're going to have a recession in the second half of the year. Yes, they said mild, but Rand, you remember transitory, right? So they said transitory, and look at what we got. They tell me mild recession. Right away, my mind jumping to probably at least a medium depth recession. And then you have other players like Warren Buffett coming out saying that year over year, one of his retailers' sales were down in the last month 22%. So the consumer is stopping their spending, and that's going to create a recession. So risk assets are wildly mispriced here, and they're going to have sizably. I actually have a downside target this year of 3,300 on the S&P 500, and I also have a downside target for the next year of below 3,000. So a couple things. Number one, a recession in this situation could actually be much, much worse. The main issue with that is that how does the Fed lower interest rates aggressively with inflation still north of 2%, right? I mean, we're still talking 4, 5, 6% inflation. Now, if it gets down sub 3, maybe they have some wiggle room, but we're not at that point yet. So to me, that's a very scary thing. And stocks and crypto have to be very aware that the Fed may be somewhat handcuffed here if we do hit a recession. And then the big question is, if we get into a recession, how do we get out? Does the global markets, do they know how to get out of a recession without the Fed printing money? And if the Fed can't print money, do we get in this long-term recession that could be very rough on stocks as well as risk assets like Bitcoin? The bottom line is the 25,000 is just a major, major pivot point on the chart, right? You had this kind of blip right here. We had the big dip down to this moving average, and then we had the run up where we stalled right there and finally broke up. So that now becomes a big target area of 25,000. But really, if you look down here, I mean, you're talking about getting down to that same moving average as a possibility in the not too distant future. And I do think that, you know, if you look at the froth, and I said this, and you kind of mentioned it, how you were saying about liquidity in the market, how much leverage is in the market. Think about how bullish the global crypto markets have been. It was very reminiscent to me of when you had crypto at 69,000, that bullish bias in the markets, yet we were here at 30,000. To me, that's a negative divergence, and that's something that we have to be very scared about.
The Federal Reserve had been maintaining for 6 months that the U.S. economy would be able to avoid a recession and make a soft landing. However, the Federal Reserve finally admitted that a mild recession is likely. Minutes from the March meeting of the Federal Open Market Committee revealed that staff members had presented on the potential consequences of the Silicon Valley Bank collapse and the subsequent banking sector tumult. The minutes stated that the assessment of the potential economic effects of these developments included a mild recession starting later this year with a recovery over the subsequent 2 years. According to Soloway, if the FOMC is predicting a mild recession, it means there will be more chaos and uncertainties within the coming months, not just for Bitcoin but for other cryptocurrencies. With Bitcoin's steady decline over the past week, many have speculated that the leading crypto asset could be giving way for an altcoin rally. Soloway gives his thoughts on this, as well as his outlook for the market's expectations for earnings.
I want to show you one other chart here. It's the Bitcoin dominance chart. And this actually could be telling us that we could be setting up for a drop in the Bitcoin dominance side of things. And what I'm seeing here is a little head and shoulders pattern emerging. And again, if we look at this, you have a little shoulder here, right? And we have this move down here. Here's your head and then down to the shoulder. And then we could be making a little bit of a shoulder. So if you break approximately this area right here on the Bitcoin dominance, you could actually see this coming down, Bitcoin's dominance coming down decently, possibly all the way back to this trend line. So what that would mean, it doesn't mean to me that the alts are going to rally. It just means that Bitcoin could actually play catch up to the downside to where the alts were or are. I think the market wants good earnings here. And the reason the market wants good earnings is that the market realizes with inflation where it is, the Fed only has limited abilities to lower rates. And so if you see earnings falling off a cliff, that's going to mean, we're heading towards a recession. The Fed cannot loosen that quickly. Remember, the Fed is priced to actually hike rates in about 9 days for their next meeting. So again, what are they going to all of a sudden do a pivot and start dropping rates with inflation still at 5 or 6%? I just don't see it. So if you start to see really a crack in earnings, it could mean not just a mild recession, as the Fed has said, but actually a worse recession, which again, with the Fed's inability to print money and get us out of it because of inflation, that could be really, really bad. Inflation can get back below or right around 2%. That gives the Fed the wiggle room to be able to lower rates and maybe print money in the future. Up here, they can't do it. I mean, just the bottom line is, we could see a bad situation with the economy. What are they going to do? Print money and then send inflation to 25%? I mean, we're going to be the next Venezuela. That's not going to happen. So you do not want a recession in the near term here with inflation this high.
The Federal Reserve is facing a difficult situation with both an impending recession and high inflation at 5% year over year. To combat one would worsen the other, and neither option looks good for the markets. If inflation remains high, the Fed will continue to increase rates, and if it's a recession, economic growth will further slow down, which has already been impacted. What are your thoughts on the U.S. economy and cryptocurrency markets for the second half of the year? Do you believe crypto asset prices will recover, or will they remain in a bearish consolidation? Please share your thoughts and observations on Soloway's analysis in the comments section below. For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.